At my job, I'm an economist. Yeah, they don't know about my watch collecting. They think I'm normal. So let's talk about the Rolex bubble. But first, a quick wrist check. I am wearing my Citizen Garrison Field watch. It's all titanium and it's a great daily carry, go anywhere, do anything watch. I love this watch and I will do a full review sometime in the near future. Now, as an economist, I've seen some frankly loose talk about the Rolex market. I'm not trying to be harsh. I know they are not professionally trained economists, so I thought it might be valuable for collectors to get my thoughts. What's going to happen to Rolex prices this year? Are we still in a bubble? To help explain the situation, we will cover 4 topics. Number 1, what is the Rolex bubble? We will define that word more precisely and understand what that means for the market. Number 2, are Rolex prices stabilizing? Everybody wants to know. What do I think will happen with prices this year? Number 3, what about China? Are they going to come back to rescue Rolex? Number 4, what about the R word? No, I don't mean Rolex. I mean the dreaded recession. Are we headed into a recession? And what does that mean for prices? And after all that, we will talk about what is the smart strategy for watch collectors. Let's get into it. Bubble, Rolex bubble. What does that even mean? Well, I would define it as the following. The value of a used Rolex watch expressed as a multiple of the retail price. Okay, so what does that mean? Take, for example, the Oyster Perpetual. When I was at the AD, the last video, the price quoted was $6,100. And looking at Chrono 24, I saw prices ranging from $7,500 to $15,000. So let's say it's $12,200 on average. That would mean a multiple of 2x, right? I was also quoted $7,200 for an Explorer. By the way, that watch looks great. I plan to get that one into this channel for a review, so look for that in the near future. Anyways, I saw used prices more in the range of $8,000 to $10,000. So let's call that $8,500. That would mean a multiple of roughly 1.2. These are not exact prices, but you get the idea. So the value multiple is a measure of the price bubble. And my point here is this. There is no single Rolex bubble. Instead, there are multiple price bubbles depending on that particular model. This is the way to think about it. How you make plans has to keep that in mind. Now, are Rolex prices stabilizing? We've had a significant drop on many models, so are we near the end? Okay, if you're a Rolex flipper, you might want to skip the rest of this video. Chances are you won't like what I have to say. The answer is no. But the reason is not what you typically hear from others. Let's analyze it like an economist. Let's say you walk into a car dealership and you tell them, look, what I really want is a 20-year-old clunker. Maybe the engine's been overhauled, maybe the wiring is faulty, and maybe even the tires are worn out. But I'll pay you above retail for a new car. I'll pay more than a new car. Does that make any sense to you? Who would do that? Yet that is the situation we have today with Rolex. How is this possible? Well, an economist would point to Rolex as a quasi-monopoly. Quasi-monopoly. If you truly want a Rolex, they are the only game in town. It's not like the situation with Coke or Pepsi. You can interchange one for the other. It's called the substitution effect. Okay, hold on now. All you Pepsi lovers, hold on to your hate mail. It's only an analogy, to get a point across. Anyways, the fact that used Rolex prices are still so high means that the substitution effect is very weak. If you really want a Rolex, only a Rolex will do. And we all know about the supply situation. It takes a long time to train a watchmaker to Rolex standards. So here's the first analysis. until used prices fall below retail, there is no price stability. The inherent tension in this situation will force used prices lower. I don't know exactly when that will happen, but it must happen. And keep in mind, all this talk about, investment watches is a fairly recent thing, brought on by a global pandemic lockdown. So is that it? Is that the truth? No, because that's not the full analysis. Even retail prices have not been retail prices. We all know the stories about collectors having to purchase junk, undesired watches and jewelry and whatever. The truth is that ADs have been imposing an indirect price increase at the retail level. Remember my last video? You had to wine and dine someone for 6 months. The truth is prices on the used markets have been converging to the full implicit retail cost for a while now because of all the AD games. But what about the overall price trend? And what about China? Could they help? Sure, let's get into that. But first, I will do another video about the certified pre-owned program. I'll share my thoughts with you in another video. China has been under lockdown until very recently, and the real estate market has been, let's say, circling the drain. And the recent data shows that their GDP growth is slowing, not recovering. It's unlikely that they will significantly increase demand in the near term. But you know what? China is not the point. The reason that watches went up so high was due to a global pandemic lockdown. We all know that. What does that mean? It means that consumers had severely constrained choices in spending their money. There was nowhere they could go, so they spent it all online. I remember the United States, for the first time in years, probably decades, had a net plus savings rate during the lockdown. Now that's incredible because people here like to spend like crazy, as if they're going to die tomorrow. So don't look for China as some rescue, because they were never the biggest push in watch prices. Now, what about our own economic growth? What about the dreaded R word, recession? The consensus among economists is that we are headed for a recession this year. Personally, I think it's only 60% chance, but that's still high. But hold on now, that's not the end of the story, because the same consensus shows a likelihood of a mild, shallow recession. And severity really matters. We're not talking the Great Recession with a capital R. It'll likely be 2 quarters of negative growth and then on to business as usual. So there will be dampened demand, but that's not the major worry now. No, the major worry is the price floor. What is that? In stock market investing, it's a psychological barrier that supports prices from falling below a certain level, because then it's deemed, a good buy. But that can't happen to a Rolex waitlist. Once people realize that they can't make instant bank on a Rolex, those waitlists will dry up fast. I mean, psychologically, it's been very easy to justify a Rolex because you walk out that door and boom, instant profit. But if that goes away, the price floor will collapse, and then it's a whole new market. And again, it means those multiple price bubbles will drop at their own pace. It depends on the model. So what should a collector do? If you're a true collector and not a flipper, then patience is the key. Buy what you like and wear the watch with pride. Watches are not investments. They were never considered investments for the vast majority of history. Rolex was a tool watch. So monitor the price multiple for the model that interests you. Once the used price hits the retail price, then the bubble will burst. That has to happen. That's it for this video. I hope you found it helpful for your next Rolex purchase. Thanks for watching, and I'll see you in the next video.